Welcome everyone to the PUG group. This is the last PUG meeting for 2017. Please take a moment to read the risk disclosure. We've done a little sound check before. We were talking about performance this year and what I will share with you. So many of you do get the weekly thoughts and observations. And what we do is we put out the information on the analysis every week of what the market condition is, what I'm looking for, whether or not we should be long, short, what sectors look good, what stocks in different sectors look good. And as you can see, we've had several different companies and different energy. Back in August, we were in, and boy, if I could turn back time on that one, that was another one that I think trailed the stop and got stopped out a little bit early on accidental. But what I was talking about off the record, and when the sound check time was looking at like an Akamai Technology getting in, nice trade, but they, after we did everything right on that we possibly could, trailed the stop, and the market started to stall, volume started to come down a bit, and I said, you know what, in this market we could easily gap lower 5, 10, 20%, because we've seen that type of action this year. And so one in the hand is worth more than two in the bush, and we'll look for another opportunity. ABC, Amerisource Bears Yen, same kind of thing. Nice trade there, 7%. So a lot of trades, if you look at those and say, hey, not bad, pretty respectful for a swing trade or a weekly newsletter that gets into trade, once a week or so, not bad. But then when you look at the end result of where those stocks went, and I know shoulda, coulda, woulda is never something a trader should do, but it is important to look back at your results. One of the ones that was the big kick in the groin, there's actually two. Restoration Hardware, and I do remember why I got out of that with a little under 6% profit. The reason is because it was an earnings situation coming up, and earnings at the time in March was just pretty darn coming up with earnings, I think, and in that earnings season was pretty crazy or something of that nature. Akamai got out of that just a tad early, and the moral of the story is we ended up with a nice rate of return on a lot of different stock trades this year. And even though you look at some of the markets and you go, look where the Nasdaq is up 36%. Well, it just didn't get there overnight, and it was probably a pretty interesting path. And while some people may have done a lot better, I know there's a lot of people that did a lot worse, especially those that didn't believe the rally and they've been sitting in cash all year, or worse, they've been selling all the way up. Now, when I come to the PUG meeting, I just wanted to say, when you have a product, can you validate the need for your product? And I think in this day and age, I absolutely can, number one, validate the need for this product. The advancement in technology, the advancement in computers, and the advancement of where institutions are capable of moving money from one sector to another, lickety split, it definitely shows where we can see markets have had big turns. What I completely enjoy about the person's indicator package and why we have the person's user group to begin with is to help you guys answer questions on how to get the most out of it. And since you look at, and I didn't cherry pick this, it's just the first on the list on the buy signal scans number 1, which is what I want to focus in on today's group. Last session we focused in on the last conditional change, which are just a dynamic function of identifying the market in a trend mode and a support resistance. Which, by the way, I want everyone to kind of, while I'm on the subject, because I'm going to get to it in just a quick second, if you kind of look at this scenario, because we seem to get that, this white line in the sand, it is a last conditional change. This is a last conditional change. Last conditional change. Market's last conditional change. Last conditional change. So if you're trailing a stop, it's nice to put your stop underneath a last conditional change. So trailing a stop and placing it under a last conditional change is a great concept. And then when a market gives a sell signal, by the way, and closes under a last conditional change, you have confirmation that there might be more of a truer reversal of trend. Now, for the person's market catcher, which is a relative strength indicator, when prices move up and the relative strength is moving down and the volume is weakening and giving us a bearish divergence pattern, I will be paying close attention to markets that have peaked out, given me a sell signal, and closed below that last conditional change candle. While we do not have a scan for that yet, what we do have is the idea to, if markets are overbought and are getting ready to maybe go through a period of correction to the downside, we can start looking at the last conditional change and start looking and running scans for sell signals. Now, there's a lot to cover. First thing I love about the product itself is, of course, it identifies my proprietary high close doji patterns. And so therefore, not only do you run scans such for the weekly high close doji and the weekly low close doji, but I think that is kind of an area that is, I hope, being used by most of the people that are trading in the equity market, because it's been dynamic. And there will be a time, believe me, there will be a time where we will be more focused on weekly low close dojis, and I think in 2018 we are going to see a change of a lot of different sectors, because I don't think the theme of sector rotation is going away. Fed tightened, economic growth, tax plan just passed. There could be some short term, as Janet Yellen in her last Fed meeting last week stated that she thinks a tax passage or a tax reform or fiscal policies could have short term effect on the economy. You know, the funny thing is, Ben Bernanke and, of course, Alan Greenspan, both really respected economists. I think everyone has to suggest that. At any one point, did anyone ever think, and so this is the point I'm making, that an economist is always right? And the fact is, we just don't know. And whether or not the tax passage will have a long-lasting effect or a short-lasting effect, it should at least help give consumer confidence, boost spending. And in the meantime, if you think about it, interest rates are still between the Fed funds rate 1.25% to 1.5%. So we still don't have a CD rate, B, money market deposit money interest rates that we can just park our millions of dollars in and collect money on interest earned. We're not there yet. So the best game in town is still equities until things start to change. My point is that Ben Bernanke started quantitative easing, and quite frankly, Europe followed suit, and Europe is still in a quantitative easing mode. The Federal Reserve is still not completely eliminated their quantitative easing. They stopped their bond buying spree, but they haven't unwound their balance sheet, so to speak. So what does that mean? That means we have fiscal changes, we have changes from monetary policy. There are actual fundamental changes. Now, does anyone know how these are going to play out? No. But when the smart money says we think it's going this way, we're going to need to rely on technical analysis tools that are better and more useful than others. And I think that's the point I'm making in tonight's presentation with the PUG group, is that we have created some dynamic indicators that seem to be picking up, at least for the longer term, some just amazing trade setups. And here's where I want to go and be a critical, constructive criticism against myself. A stock like ACAM. So let's take a look at Akamai Technologies. How we got into the trade to begin with was something that I looked at in the trading room with a monthly high close doji, and we talked about it and said, there's a little gap, it'll come back, fill the gap. It broke out and closed above the last conditional change, and then all of a sudden it closed and broke out of the weekly last conditional change, and then when it rallied, we bought the pullback. So if I'm not mistaken, that was maybe it was back in here, excuse me, around 51. We used and trailed the stop. We took a from that I think a pretty decent entry on how to trade it. And I'm trading it and picking up opportunities is a different stories. So we actually we got into that on a pullback in the market at around that 51 and change. So as the market gapped up, it pulled back. Too much of a gap up. It did break out. But here's what's really neat. The relative strength, person's market catcher, turned bright blue as the market was going up. The volume indicator, as you can see, is clearly trending up. And so we made money on the trade. We scaled out. And as it got near a new resistance level, as you can all see, here's where I want to kick myself in the fanny. So at this point in time, the market rallies. I've trailed my stop. I think I've done an efficient job in taking a trade that, quite frankly, let's face facts. I didn't buy it on the low. I didn't advise that monthly high close doji because we were doing other things. But I did catch the trade based on the weekly analysis and put that in the weekly thoughts and observations, and we put a limit order. We got filled on the trade, and we trailed our stop. We got out of half the position, I think was a reasonable thing, and then trailed the stop below the last conditional changes. So why did I decide, as it was sitting up here at resistance, to say, you know what, I've been in the trade a long time, it stalled at resistance, and we were coming up to a tax thing. It could gap lower, and just blow right through our stop. It's like we've seen that before. GE did it, and a few other things have done it. But here's the point I'm trying to make. The relative strength started to stall, but it was still positive. The person's market catcher was still positive. The volume action was starting to flatline, and the histogram, as the market was going up, was starting to stall. So I felt that the safe play, rather than trail the stop underneath the last conditional change, was just to simply get out at resistance. What happened? Well, that was on a Friday ahead of the weekend, and then the market closed a little bit higher. And then what happened on a Friday afternoon, and obviously somebody got wind of it before the close because the market broke out. Look at the orange candle on that Friday. And this is important because if you're going to be looking at a product or a package or indicators, show me what it's indicating and is it useful. And I think in this case, you can clearly see that someone started to get some information that something was going on here. And what it was is that a firm announced they were taking a large stake in the company. Well, they announced they were taking a large stake in the company, but I bet they were taking a large stake in the company right in this basing action when we were picking it up. So the point is, the indicators were picking up buying by an institution, and it was finally announced, it was finally announced right here. So maybe it stalled, but they knew no one was selling it. I just, I did not get the email that someone was buying it, but that Friday, the market broke out a little bit more, and you could see the relative strength and the volume certainly on that day just cranked it up right before the close. So somebody got wind on that Friday, and I didn't get the email alert. That would be called insider trading. And it was announced that Friday on the close that they were taking a large stake in an interest in Akamai Technologies. So it's kind of interesting that the footprints of institutional buying, or as I could say, institutional selling, because this is IBM. Now, the funny thing, the difference is IBM and Akamai have the same, they're kind of competitors in that field to a limited degree, right? But if we go back in time, and I know I've done this before, and I don't mean to rehash old business, but the person's market catcher combined with the indicators, with the volume, and how we utilize these scans and the last conditional changes, putting it together, which if we're in a market condition that we start to see prices rally, and the relative strength is weakening, and we have volume divergence formations, it gives me the idea that the market, and in this case, it did have a delayed reaction. So what I walk away in 2017 with, and how I enter 2018 in using the person's indicators package, is that perhaps maybe wait a little bit, there might be a delayed reaction, but it seems that in this case, just like the reverse of Akamai, we were looking at a footprints of the sand, so to speak, of institutional selling at this level. Who was it? Warren Buffett. Warren Buffett had sold a 30% stake in from Berkshire Hathaway in IBM. And when did he announce it? He announced it back when the stock was trading, I believe, right here. I think it was right in here at 150 and change, and on CNBC with Becky Quick. And I know that's Googleable. We've gone over this, and a lot of you guys saw that interview yourself. And he just, in a grandfatherly, nice little casual way, said, "Oh yeah, we got out somewhere near the high, up there around 180." Okay, so that's what he said. Somewhere near 180. I bet you all they were doing, and that's what happened as the market rallied. Berkshire Hathaway, that's why the volume's going down, because it rallied on light volume, because every time it rallied, they were selling over time. They were liquidating over time, and then started to really liquidate. And when no one was left to buy it from them, then it was left on its own devices to go straight down to hell in a handbasket. But the relative strength, the person's market catcher, and the combination of looking for, which is really pretty wild if you think about it. The high of the whole move in IBM was formed on a daily low close doji, and we never took, if you look at that last conditional change resistance, I mean, it really was, it formed the big sell-off when it closed underneath the last conditional change. So that is probably, and what is unique about our indicators and the packages, how to put it all together, run scans, and filter out better trades and move forward. So this coming season in January, there's going to be, and we'll do a webinar in January, but every year we get this on stocks that have tremendous gains to the upside. What happens? They generally are vulnerable for a little profit taking. And there's a whole bunch of those names right now. And on the radar screen for the person's package, we've taken the person's market catcher and we've given courses out. We've taught how to use this. If it's red, it means that the market relative to the overall market is negative. It's not that it's just down on the day. That this is, it just so happens to be in our front of us is the Real Estate Investment Trust REITs. Well, that's kind of wild. I don't know what to look at. Let's look at Boston. I think that's Boston Properties. So we take a look at Boston Properties, which is ironic because here's a stock that does rally, right? The relative strength on this particular move, I mean, it's not tearing up the skies by any stretch of the imagination. It makes a newer high, and the relative strength is making lower divergence highs. Volume's not really, I mean, it doesn't tell me anything. It was starting to move up, but it still didn't go anywhere. The momentum of the volume was weakening. So, I mean, when you start to look at stuff like this, and that's on a daily basis, what I want to be scanning for, and what we will be scanning for, is stocks that are like near their 52-week highs, which, by the way, let me go over and bring this into your attention, because this is exactly how you're going to get the most out of trading opportunities this 2018. And I think whoever has cash will be king as we get into, I think, better trade opportunities in 2018. Why? Because there's no more indecisiveness whether or not the fiscal policy is going to be changing and when and how. It's done. We've got the tax passage. So that's how there's no more ambiguity there. We've got the Fed, who's already raised interest rates. And now we've got to just see if the economy is going to chug along. So now we'll go back and trade I think, in a normalized world, and we'll find out if we also have another interesting thing, a change in healthcare. Healthcare is not the big economic boomer, but it is a component of the markets that we trade. Let me share something with you that I think is kind of important. And this is a couple things that I wanted to bring to your attention and get a little bit of what you can use the person's product with and for, is running some scans, especially stocks near 52-week lows. We have a seasonal stock trade list that are, and check this out, using my volume indicator and relative strength indicators. We are looking for stocks and scan for stocks that typically go down, that they sell them, they pressure them down. GE got more downside today, I believe, and you get a lot of names. And as I said here, by the way, I wanted to make mention of this as well. We got a lot of names that are negative on the years or near their 52-week lows. There were 69 names that made the list that were optionable. So I wanted to look at options. So I separated this one particular line here, and I'm gonna put this actually in bold for us. There were many names in the energy sector, more so in oil services and drilling space. If we start to see concentration of daily buy signals in the middle of January, well, forget the middle of January. I should have said any day now. That's what I should have said, any day now, because energy had a big boost today. Then we can buy either more stocks or the leveraged ETF, and we'll watch for moves in OIH. Anyway, I just wanted to point out that we can utilize, and let me quantify that statement for you. When I go to the scanner, gang, I always like to go to buy signal number 4. All it does is just do one thing. It gives me unfiltered, and that's why it says no filter. So it's not looking to take buy signals near a pivot support. It's not looking to take a buy signal near pivot support if the weekly's in a buy mode, like Kellogg's is. It's not looking to take a buy signal on a daily basis when the weekly generates a buy signal. Those are filtered. The scan number 4, if I start running every day, and here's what we could see just today alone. Is this a tax plan energy, or do you think, is this just, in my mind, we already started to see a lot of these stocks go down, and I don't think this is a tax. I think this is like these stocks got sold off. You will notice that a lot of these names may not come up, as a normal name to you, but Delic Holding is a $33 stock. A lot of these names are in the small cap Russell. They're small cap names. So we will see a lot of the names, and of course Phillips 66 is not a small cap name, but a lot, and it's not even near its 52-week lows, but it did generate a daily buy signal. But a lot of these names today, we got a lot of concentration of energy names. In fact, this wasn't just again in the case of Noble NE is the stock that I'm focused on right here, Noble Energy. It not only, it's out of focus, but it generated a buy number 4 and has a high close doji. So we're in a high close doji formation on Noble Energy, which is kind of a neat thing. So the problem with this is that it's not a problem, but it's in a weekly sell mode and it's in a trading range. But what I use this scan for is to look for what? A concentration of stocks in a sector. And this is one, by the way, that you probably want to focus on for tomorrow because it did a couple neat little things. Number one, it closed a high closed doji and closed above a last conditional change resistance point and there was a little bit of upside volume in it, and the relative strength was improving slightly against the overall market. So the fact that it is in a trading range generating a high closed doji, Noble Energy, by the way, it's nice to see that. But all right, how do I get the most out of my tools? This is one of the ways I get the most out of my tools. Knowing seasonally speaking, why did I even say mid-January? Because that's the best time to buy energies. But sometimes the funds know this, and so they'll get into trades a little bit earlier. What we want to look for is to see if maybe, just like Akamai and a few other names. What I look for is stocks that are near their lows, like Noble Energy, that all of a sudden, this to me starts to show that the volume was starting to creep up. I mean, this is a lower low. If this is the number 2 point and that's the number 1 point, corresponding indicator 1, 2, and then 1, 2. I mean, the number 2 point as far as indicators as the price made newer lows is improving. It's made new volumes. The number 2 point was higher than the number 1 point. So we have, in essence, a lower low in price and a higher low in indicators. So we have bullish convergence here. The market rally didn't go anywhere. And it now looks like it's a short-term turning to the upside. And here's what's neat. The entire sector, or not really the entire sector, but a lot of stocks in that sector all generated buys today, and we'll see if that starts to continue. And so a breakout over the last conditional change, and I understand this is a sub $5 stock, but boy, if this thing closes over 470 on a weekly basis, it really does, and that's, where did I get that number from? It's the last conditional change resistance. So I now have better evidence of how to filter out trades and get the most out of my indicator package and to look at this. So again, putting it all together, tying up what we covered over last month with the tool of the last conditional change, it helps to kind of give confidence, and it certainly lets us know that the signal, it confirms, gives better confirmation that the signal is valid, at least in the sense of this high closed doji, that the market closed over not just the high of a doji, but a previous resistance on better improved volume and relative strength. So that's kind of a neat thing. Now, this is Pioneer at PXD. I know all about this company, and we were, I had a choice back in the summer when I was in London, and I gave a presentation to the guys we had a seminar in London, and there was a couple guys. One guy was a hedge fund manager, and knew all about energy. He was a little bored with my stuff when I started to talk about the crack spread and things like that. But when I started to show the scans, he went from his head and his chin and his hand to all of a sudden taking notes real quick, and he seemed to be a very impressed individual who is now a current client. So I'm sure you will be listening, and I just wanted to make sure that you, so that you know that I know that you look bored at the beginning, and I know for sure you know what I'm talking about. And I'm not going to call you a doubting Thomas, but we seem to get a lot of people that are like, oh, I see what this guy's about, and he's full of it, and then it turns out, no, I kind of like what he has to say. Anyway, so moving forward. PXD, I mean, this thing has broken out, but boy, I think it started, you looking at the information at hand with the relative strength improving because it's fuchsia color, with the volume going up, and it's in a PPS buy mode. I mean, does this look like this was a tax plan buying, or does it look like they were already starting to accumulate this stuff? And here's an old resistance. This market, if you take a gander at this, here's the last conditional change over there. Here's it held resistance here. It acted as support. You have old support and new resistance. This last conditional change, it's a highly concentrated amount of last conditional changes up over 167. man, on improved relative strength and improved volume and closes over that resistance, to me, this tells me that I would be, again, praying for a pullback into that area over the next few weeks. I would be looking at that with stops right underneath the last conditional change. So I would be then therefore looking to run a scan number one and focusing on just energies. What is scan number one? Real simple, gang. It's give me a daily buy when the weekly's in a buy mode. So for energy specific companies in between now and of course mid-January, I will be focusing on a couple things. The energy space, and look for hopefully pullbacks, and we'll start attacking the energy complex as we get into mid-January or so or before. So that's how we go through looking for opportunities and being what seems to be the right side of the market. Now, how we trade it is a different story. There's a lot of trades out there that we tried to do with options this year, and they were so thin, so expensive, and the definition of thin was between the bid and the ask. It's like your bid 120, your ask at 280. It's like, what? Like there's like no one trading this stuff. So to be an outright trader in options in 2017, we had to do things like try to get into butterflies and try to get into all different types of strategies to reduce the cost in some of the trades. And then you had, of course, earnings with the implied volatility that went up. Some stocks went beyond, so selling premium wasn't all that great. Sometimes just buying strangles was the better strategy. But that's in hindsight. I think in 2018, Person's package, this indicator package, is going to be so useful. And I mean, when I say useful, it's going to be critical. And I'm not just bragging, and I'm not saying this just because all of you guys already have it. But boy, I'll tell you something, gang. What we're going to be wanting to focus in is how many stocks and sectors are at or beyond quarterly pivot resistance. And almost every single sector right now is well near or beyond the Person's quarterly pivot resistance. What does that mean? Well, let's just pick one, XRT right now. It's well beyond quarterly pivot resistance, and the volume is starting to pick up. So there's the volume right here. So it's already at quarterly pivot resistance. So I'm kind of hoping one of two things happen on a monthly basis. The end of December, I'm hoping that maybe we get a little bit more uptick. You close over an old resistance. That last additional change has kept this market or that sector of the market hostage. It hasn't done anything. It had a huge move from 09, and perhaps this is why the retail space hasn't done all that great. Why is XRT done well? One company, you can add maybe three to it. AMZN and COST. Those two companies, along with a couple others, those are the one, Burlington Coat Factory, Ross Stores, in the XRT component space. Those are names that have really held that index up like as it has. The point I'm making is I can take a look and say how many stocks or sectors in the market are overstretched at a resistance target. And if the entire sector is at a resistance, I can just point and click and say, gee, do I want to look at daily buy signals on that? Or maybe I should start running scans for daily sell signals. And here's the next function or feature that you're going to want to do. Is the market starting to lose its relative strength against the market? Since I focused on XRT, let's just stick with the stock right now. And if you notice here on XRT, at least on a daily basis, ironically, as a sector itself, as it's been rallying, as a lot of the stocks are going up, here's the funny thing. This market's gone up, and the relative strength is weakened, and the volume's weakened. And that raises a red flag. Now, I will be watching to see if we start to give sell signals and we break below last conditional changes. So it's not just XRT. You can take a look at this and say, what else is up near quarterly pivot resistance that would be vulnerable for sell signals or weakness? You have so many, I don't know where to start. Semiconductors, number one. SMH, in the SMH, and I think that the market here, and again, as you can clearly see, here's a semi and a beautiful situation of where the market made, and I think this is what you guys want to be focusing in on to get the most out of where your money should be and how to use this sophisticated, which I think is extremely sophisticated, but yet very powerful and easy to use product. Number one, the market made newer highs. And, you can clearly see the relative strength is not making newer highs. And you can obviously see the volume. And, we actually were talking about looking at this as in the trade community. There's a lot of things that, as a whole, you can see the main difference here that this market, as it started to make a newer high in the marketplace, this is a daily chart in the semis, we were kind of showing a little bit of divergence on balance volume. But boy, by gosh, this thing turned actually negative against the market. And the relative strength the moving average started to turn red, and it started to weaken against the overall market. So when you get a sell signal and a breakdown of last conditional changes, that'll give you an idea that there might be some more pain ahead, or as you get into bearish divergence patterns like that, to respect markets that are at maybe a higher degree time frame resistance like monthly, quarterly, start respecting that, and then look down below and look on your radar screen and say, gee, I don't need to look at the relative strength, it's color coded. And that's what's kind of cool. The relative strength, and let's see if I can get this. I can't fiddle with that right here because there we go. All right. So the relative strength, and that's the RS, you can start to see if it's dark blue, baby, it's still stronger and outperforming the market, but it's weakening against the overall market. And the moving average being red is a warning sign. So you can pretty much get an idea that if you get a lot of stocks that are starting to show weakness and they're at quarterly resistance, they're vulnerable for sell-offs. And just remember, divergence, higher highs in price with lower highs in indicator is a very dangerous sign, as I've given, and the inverse is true with bullish convergence when you get an indicator that has a higher low. The bullish convergence and bearish divergence are extremely powerful signals, especially in the indicators that we've combined and used. And I have to tell you that the volume indicator we created, and the reason it's so exclusive is because people are still using regular volume. More people started to use on balance volume. And one, John M., I don't want to throw you under the bus, said, hey, he asked a question at the November seminar, and he said, John, question, I'm starting, the volume indicators working a little bit better than the on balance volume. And that's absolutely true. And I think the reason is because I don't know if it's because of ETFs. I don't know if it's from the passive investment concept of funds. I don't know what the reasoning is, but the percent change relative to how on balance volume, I seem to myself personally be using the volume indicator, and I've been saying this since 2014, has become more reliable in my daily work than ever before, and I think that will continue for 2018. So the PUG meeting today, vital that you understand, very important. It is so powerful. I think it's going to be the way it has been structured on the TradeStation radar screen. Are you in a sell mode? Are you near resistance? What kind of resistance? Everything you need to know is right there on that radar screen. Are we near quarterly pivot resistance? Are we near new monthly pivot resistance? Is the pivot status blue above gold, bullish or bearish? Is the trend starting to change on the short term? Are we near weekly resistance? And then finally, if a sector or a stock is starting to weaken, and the more it's starting to weaken against the overall market, and it's in a buy mode, the less I want to be buying it. By the way, this is the materials sector, which, as you can see, very few. Monsanto is had a kind of a bad day today. Air Products, FMC, Newmont Mining had a pretty good day today. In fact, the gold, all of the gold stocks kind of had a good day today, and so did JNUG, something that we've been looking at. Reason is we combined seasonality for gold. On or about 12:15, you start to see gold move up into mid to late February. So, any event, what's kind of interesting is that knowing that, and an opportunity may present itself, and here's a kind of a nice little situation: high close doji, breakout above a last conditional change, market goes up. At least while this, the condition is what I was just talking about: lower lows, relative strength, higher lows, and here is the volume indicator giving you that bullish convergence. Is that $1 million trade? No, but it's a profitable trade. And you know what? That's what I want to teach you guys, to be more selective and get the most out of what we have here. All right? So that's what I think today's, if any message is, how do you get the most out of the person's indicator? These scans you got to start somewhere. Obviously, we want to look to find out in this aggressive marketplace. And when I say aggressive, I mean, boy, what were we at? One point, almost 36% year-to-date gain in the Qs. Yeah, I'm sure it's going to have another 36% gain next year without a correction. That's sarcasm. I apologize for that. But I do think that while things might be good and we get sector rotation, I would have to say, yeah, we're more likely to see a correction as the NASDAQ composite, which is a vital component. It's had a very dicey and juicy kind of mix with its rally in price, but not in its breadth, and that's called divergence there. Volume hasn't shifted a whole lot using OBV. And let's do one other little test for you guys real quick, and then I'll tell you why I'm explaining this. So we're going to go to Insert Analysis Technique, and we're going to go to Persons Volume Indicator. It should be right there, and hit OK, and hit OK. All right. So look at the with the on balance volume, it's kind of not sharing or showing the relative divergence that is formed in this market. So, I mean, this is not a sector that I'm too interested as far as the NASDAQ composite, which is less likely to have influence of just one sector like semis or biotech. This is everything thrown in the mix. And it is starting to form and has formed a daily volume and breadth divergence. So that'll be something that as we move forward into the next week, as we leave Christmas, get into New Year's, I would suspect there will be a lot of, we just do our top-down approach and start scanning for sectors within there that are more vulnerable for downside. And the stocks that are a lot of stuff near 52-week highs that are starting to form bearish divergences, which, by the way, bearish divergence and volume and relative strengths on stocks near 52-week highs include stuff like Activision Blizzard, Amazon, which, it's like, man, that's scary to sell that one. Affleck, Adobe, McDonald's, Caterpillar, Facebook, Goldman Sachs, Home Depot, International Flavors, Wynn Resorts, and Cisco. So just to say, gee, how do I get the most out of this? I can see whether or not a market breaks out do I want to be in that sector or do I want to be short that market? If it starts to show signs of weakness, and we did get that for a little while, and then things kind of changed in a heartbeat on us. We had volume, and then all of a sudden the breadth moved up. But I can say that's probably the one main reason why I said, you know what, let's try options on the downside, but let's not sell stocks, because we just didn't get a lot of stocks that conformed to a pattern of weakness, because we had divergences in volume. We had divergences in the relative strength, but they didn't give sell signals and close below the last conditional change. And those are the considerations that you guys, I want you to focus in on, and you're going to have, I think you'll avoid a lot of bombshells, number one, which are more than likely to come in 2018 now that we have news is out. There were changes fundamentally, so I expect changes to be reflected in the stock market. And what's the most susceptible market for a sell-off? One that's gone up too much and that is can be negatively affected by both interest rate hikes and changes in fiscal policy. So those are the ones that I think our tools will be picking up, and they might be picking up. So let me complete and finish where we started from. Holding periods. If anything I had to change was to be more patient on sell signals and be more patient on those winners, because it seems that the indicators are working. It's that the market is given a time bomb or a time release reaction. In the case of Akamai Technologies, the indicators populated that there was, without a doubt, institutional buying, and then we later found that out. As in the case, we did a trade, ABC. And I know that you guys are probably going to say, why can't he learn how to pronounce this stuff correctly? Amerisource Bergen or Bergen or Berger or Bergen. I'm not sure if it's Amerisource Bergen, but it doesn't matter, because all I could say is this was one that was picked up, no doubt about it, weekly high closed doji scan, right there, weekly high closed doji scan. And we got lucky on a pullback, because the way the risk was to get in at 78 and have your stop underneath 72, a $6 stock, a little bit greater than my risk factor. So we kind of scaled in. The daily did the same thing. And I think in this case, we got a great entry, and it pulled one of those where it goes below the last conditional change. And that's what I wanted to share with you. We seem to be doing this. The market, I'm not sure if it's an algorithm situation, but they trade underneath the last conditional change, and they stop you out, and then it takes off without you. Do you get right back in? Well, maybe we got to figure it out, but that was I don't know, that was an announcement of, somebody said they were going to vote on something, and, God knows. And the market was very jittery at that point in time. So anyway, we were long. It was another stock we made money, but another example of where sometimes that the last conditional change, being long and placing your stop underneath the last conditional change, it's still going to stop you out. This is not the same chart. It's a different one. The last example I gave was based on a weekly basis. This is a weekly. But it still reflects that, you know what? We are picking up some really neat stuff on the indicators, and it seems to be working. And even on a daily basis, a high closed doji on improved relative strength, on phenomenal volume uptick, this stuff is working. And even a breakout close above a last conditional change, a nice trade to the upside. You'd want to capture some of it, in which we did. So I think going forward, guys, ladies and gentlemen, going forward, these scans, as they work for the upside, are going to start to work for the downside. And you know what? I think a lot quicker than a lot of people think. When I mentioned that Home Depot, for example, has bearish divergence, but why didn't it generate a sell? Well, real simple. Let's take a look. Number one, we're starting to see the market go up and make higher highs, and the relative strength's going down, and the volume is showing a distinct divergence pattern. But we have a last conditional change here and no sell signals yet. So unless we get a sell signal and it closes underneath a last conditional change, even though the divergence is there and everything, you cannot sell unless it goes under a last conditional change. And that is the key, the magic between teaching last month and following through to this month's end of year wrap up for the PUG members. Top down approach, scan the dickens. In 2016, you guys know this for sure. We were big buyers in January of 16 when everyone was saying jump out the window. 2017, amazing moves, and we did catch a lot of these trades. Last but not least, as far as a stock, I just want to go through and double check something. Back in March, and say, what happened? You know, what can I do better? What prompted me to go with, back in March, Restoration Hardware? Well, we were long Restoration Hardware. The volume was improving. The relative strength obviously was breaking out. Great stock, and we were coming up to earnings, and we got out. You know, it went up, and yes, all year you could see the relative strength as it was starting to rise more. The relative strength based on a daily chart started to do what? The relative strength, because the market started out to perform, was weakening, and then it gapped lower. Didn't stay down very much, and then what happened? The relative strength went up. The volume, they were surging ahead. Then it had another chance to get in there. I could have bought that stock, I think, by the end of August and into September, we were into other things. So, I mean, if you think about it, this big gap was on an earnings play, the majority of the market. But let's take a look at, could we have done better? If you look at this stock and you say, well, you were buying at 33 and now it's at 102, gee, should have held on. But if you notice here on indicators, this was a pretty, I mean, if you bought it here, you probably got stopped out. If you bought it there, you definitely got stopped out. And were you going to, after a market went down, were you going to take a trade ahead of an earnings like this? You know, kind of a dangerous thing, but as the market was starting to go up, the relative strength improved and so did the volume. So I guess the indicators are there. I just need you guys to learn how to use them and put it all together more efficiently, and get a little bit more confidence in what it's teaching you. Not all trades are going to be winners. Not all trades are going to be losers. And some trades we're going to get out early. Some trades are going to get us out, and the market's going to keep going. But I think it gives us an edge to see positive performance, and that's what we want. I keep mentioning about the person's algo optimizer. And, you know, while I was in Latin America, and I just want to bring it home and close things up with you guys, we had a kind of a couple questions here on the algo optimizer. One is, hey, John, how's the crude oil algo system working? Off the charts, it's phenomenal. But here's another one that's off the charts and phenomenal. When you guys were in the algo optimizer, now keep in mind, I just want to make sure that everyone hears this. It is being recorded. GBTC, OTC, HB, standing for hard to borrow. But so keep that in mind. What's really interesting, though, is that probably, I'm not going to say half, but if you take a look at some of the stocks that are on our list here in the S&P 500, you will see a lot of stuff is on the, like, Leibniz Bassi. I mean, it only trades 2 million shares average on the last 10 days, 1.9 today. It's also on a hard-to-borrow list. So is Royal Dutch Shell, which I know that's not just trades 4 million shares a day. So, I mean, you go down the list and you look at some of the other names that are on that are stand for HB. Like, since when is General Dynamics a hard to borrow stock? Since, you know what I'm saying? So it's kind of funny. when you get down the list and you go Seagate Technologies, when you go through the list and you go, wait a minute, these stocks trade a lot of volume. It's not just a lot of volume today. This is a volume on a 10-day average, and this is comparing the volume today. You will notice it's kind of weird that we have a lot of names. DTE Energy. Well, all right, I get 32,000 today. Just to let you know, anything that had energy, look at the volume today on that. Double its 10-day average. So institutions were in full force trying to buy energy a little bit today, but a lot of stuff that should not be. Under Armour. How in the hell is Under Armour hard to borrow, right? There's a lot of names within TradeStation, and I'm just sharing this with you so don't be frustrated, that are on their company's list of hard to borrow. It doesn't mean you can't trade it elsewhere. So taking the signals from TradeStation and trading elsewhere might serve you as well and be a little bit better off. JNUG, an exchange traded fund, 10 million shares. How in the hell is that on a hard to borrow list? But it is, right? So going through the list of names that you would think GoPro, yeah, 4 million shares a day, hard to borrow. It's hard to borrow because TradeStation doesn't have it in their inventories. It's not to say that it's impossible. Roku, Riot Blockchain now is up to 6 million, 13 million traded today. So what's the point I'm trying to make? When you use the optimizer, perhaps, you got two choices. You can use it as, of course, trading automatically, identify the buy and sells, and go from there. This is the Bitcoin ETN that we've been promoting and talking about and providing information on and how to trade with Bitcoin. While it's not up like bazillions of dollars, keep in mind it's trading in a format of automatically calculating how many positions I should go for, how many shares I should go for the amount of money that I want to risk, lose, or put to that trade. And in this case, it's $10,000. So if you go to Format Strategy and you hit Format, you'll notice that I'm using Position Calculated Method 1, only $10,000. So I want to know how much and is my max trade loss, my max trade profit. I mean, if it gets anything close to that, these are the settings that I have. It's ironic that, as I said earlier a couple weeks back, it got long, it got out, and since it never generated a short trade, it didn't do anything. While I was in Colombia and initiated a new long, and then I did tweet this out the other day, it initiated an exit on the high. And since then, I mean, it's kind of funny that, well, it's not funny, but I mean, anyone that bought it here because of the launch of the CME, it's down like over 30% since the system exited the long. So the system on the person's algo optimizer is doing what it's supposed to do. Give us trades, help calculate your share size that you want, and give you profit loss trailing stops. And again, same thing to be said with every other product that we put out, such as the VXX, which has been an insane product. Performance graph now. The performance graph has stalled a little bit on this because the VXX has done a couple things. It's kind of lost its valuation, number one, because it's no longer at 60, 50, 40, 30, keeps dropping like a rock, number one. And number two, this is what we're testing right now. If you notice here, it says Person Algo System 13. Well, why is it 13? It's not released because we are making sure everything works. For those that have the Algo Optimizer, just to give you an idea, we have a better way of formatting and optimizing the best time of day to trade. And more importantly, it has a function. Instead of having to type in true, false, you will be just looking at 0 and 1. 0 being false, 1 being true. I don't want to take reverse signals. Meaning if I'm long, just stay long. Don't reverse if you get a sell signal. I want to only take PPS buy and sell. I only want to take high-low closed dojis. So if you're only bullish, you can turn these on turn off sell signals. This is the new function, the new feature, the one we're testing right now. It's called the last conditional change confirmation. What is that going to do? It's only going to take trades. Instead of taking a buy signal, if it doesn't close above resistance, it won't take the buy signal. If it gives a sell signal at a last conditional change support, it won't take it. It also will allow you to optimize to make sure that that's the right thing to do. This right here in of itself is insanely ridiculous, it brought everything to a new level. The whole concept of what we developed here, gang, was awesome. So we have been teaching those few that are fortunate, because this is not mass marketed. We only had a few licenses left. So, this isn't a promotion for that. But what I wanted to point out to you is that the Algo Optimizer, by the way, and we go to Format Strategies, you'll notice the next one will not be 13. It will be 14, not because of 13 a bad number, is because of a couple glitches that we were working on. So when we get into, this is a treasury bond 15-minute chart, by the way. So when we're looking at trading things, I wanted to point out, here's a sell signal, but it took its sell signal at last conditional change. And then finally, it broke below the last conditional change. 1, 2, 3, 4, 5 bars later from the sell signal, it broke. So it didn't generate a sell this whole time. Well, guess what? That is another criteria function that we need to fix, and that's why number 14 will fix that, and it'll state seriously, if it's in a sell mode and closes below LCC, that's a sell signal itself, then sell short. And you'll have a function to optimize to make sure that you're doing the right thing. So this isn't over optimizing, it's giving the user, and some people might only want to take confirmation sell signals of below a last conditional, like this one right here, gang. So this is because the range isn't great, you and I would look at that and say it's a doji, and we would look at this and say the low close doji. Discretionarily, we would sell that. But because the range is so small, even though it is a doji, we don't consider it a doji. It has to be a certain percentage. It can't be 2 ticks or 3 ticks, right? So, but here's the deal. You will notice that the thing was long and it got the heck out of Dodge. But notice that it had a PPS sell signal and closed below the last conditional change. Do you notice that? Guess what? It got out of the long and it goes short. And that's the new function feature. That's what we want. We want to take sell signals that are confirmed PPS that close below last conditional change support, and then trail and do what you're supposed to do and get out of half the position. Short 2 gets out of 1, and then it's still short. That's what number 14 is going to give everyone. And this is off the chart algo strategy trading at its finest. And that will be try to get to you guys by the beginning of 2018. So this is what we're doing in our free time, because this is so exciting to have a product that not maybe is good, but and competes with hedge funds, but I'm hoping that does better than what most hedge funds can put together, and put that in the retail public's hands for, like, compared to running a hedge fund shop for a very, very inexpensive price. So with that said, I want to say, everyone, Merry Christmas. Crude oil system, a lot of you guys have already given me the compliments. It's just crude oil, and as far as a choppy, dicey market, new equity high. How is it doing? It's doing great. It's doing what it should. And all these will not to try to make something better. If it ain't broken, don't fix it. But we want to get better signals and confirmation to help filter out noise so that it's efficient in all markets. So that's the bottom line, gang. And I want to say thank you for all participating. thank you for your support this year, and I hope you found value in everything that we've done and put together and allow you guys to get a better edge in the market. Merry Christmas, first off. Happy Hanukkah for those of my friends. I know Hanukkah's kind of over, but needless to say, Merry Christmas, everybody. Happy New Year. And here's to a very healthy, happy, prosperous 2018. This is the last PUG group for the year. Thank you all very much, and peace to everyone and your families. God bless everybody. Amen. See you next year, gang.